Likewise.
Let's jump in. You are here so that we can pick your brain. Let me start with giving a quick intro of you. So, Robert, you are a co-founder of Nordigen. It's a Riga-based open banking, you would say actually a scale-up, and recently has been acquired by GoCardless. Until then, Nordigen has been used by thousands of developers and companies across Europe. And it's truly one of the up-and-coming success stories of Latvia and Baltics and beyond. And now you are in a VP role at GoCardless. On top of that,
That's
over
right.
the last less than a year or so, you have been pretty active in angel investing, but you haven't been before. So actually, I understand through BADideas.fund, you made your first jump into angel investing, and so far have made already 11 investments. So that's how would you be okay that we cover that? You being a founder, you being super busy building your own thing, yet trying to get into this world of startup investing. Let's start with why would you want to do that?
I think my primary reason, after all, is that I'm a big patriot of Baltics. I really want to see our tech scene flourish. I also have a lot of empathy towards other founders, so I know what pains they have to go through to raise money, and I would be happy to be on the side where we can help out great founders building great companies in this region. So it's actually very simple. And on top of that, if I can make money out of it, like why not? That makes the deal even sweeter.
So Patriot is the reasoning, but besides that, what else? Is there a wealth building aspect? And when you decided to do the first angel investment ticket, how did it feel? Walk me through.
No, absolutely. So I don't want to simply give away money, right? So I obviously thinking about wealth building, and this type of investment, I think nicely fits the profile of ways I want to invest my money. So I think people should be aware there's like very different ways to invest your money, right? So there's like some more short-term, some long-term type investments. There are different risk profiles. And I think people, first and foremost, should find an option that's very suitable to them. And I don't think angel investing as a form is the most suitable form for everyone. That being said, the things I like in principle about angel investment is that I find myself to be fairly risk tolerant. I find myself to be okay in working in like high uncertainty environments. I think that comes from me being a founder, risks I'm ready to take. And I'm also okay of investing this money in, let's say, kind of midterm, waiting for years to see any returns out of it. So I think it's around, like in the VC world, I think it's around like 10 years for funds to expire. So I'm perfectly fine of locking in my money for that period of time. Now, to answer your question, like how hard was the first step? Like that was incredibly hard. So, but then it's like it's as with founding companies, you just have to make the steps. So I very consciously knew that I don't understand like angel investment in very detail at the time when I made the first investment. But I think my first investment was fairly small, but I just wanted to kind of get a feel of the process. And meanwhile, I reached out to a lot of people, tried to kind of learn the trade. And every next investment I make, I feel much more comfortable with decisions I'm making. So, I think angel investment in principle nicely fits like how I think about my wealth building, and also the process has been very gradual for me. But I'm kind of full in now, so I'm definitely sticking around.
So how has been your thinking when it comes to, okay, when I want to invest in this, or I don't even want to invest in this one? How has it evolved? So you made 11 investments over less than a year. How has it changed since first investment?
Absolutely. So, first of all, I think the way you can define my method is I'm kind of building my own neural network, and my approach is that I'm making like bigger or smaller investments in almost most of the deals by the ideas funding, There's just very few I'm not partaking, but the idea is then that I'm very actively following the monthly newsletters these companies are sending. So I'm kind of reiterating some of the assumptions I had when I made the investment call. So like when you look at these monthly reports, like, okay, this is where I made like incorrect assumption on market or a team. And then I'm readjusting my model. So whenever I'm taking the decisions on next investments, I already have some kind of preconceived model I'm kind of running these startups through. And again, to be completely transparent, like, so first of all, I think it's the four kind of pillar method on what was it, like team, market, distribution, and traction. I think that is like a very good like a fundamental model of how to think about early stage companies. And I particularly spend more time on digging deeper in the team and market components. So I listen into interview processes, and in the interviews shared, like I want to get out of, want to get idea how the founders think, what is important to them. The same thing about market. I want to understand like how good grasp they have on the market, how big the market is. And the challenge I have is that as a founder, like I think I'm filling too many gaps for the things I'm reading, is because I kind of have a wishful thinking that kind of they have figured those things out. So sometimes I have to kind of make myself to be more critical on things I'm kind of reading or listening on the pitch decks or in the interviews with the founders. But again, for me, those are two main components because in my personal view, those are the most critical things. I find that things like traction is important, but that very often correlates with the evaluations that companies have. When it comes to distributions, is like I think if you have the right team in place, they'll figure out how to distribute the service. Those are still important things, but not in the kind of the box of team and market for myself.
Perfect. So you subscribe to the four areas we always try to evaluate as a community these deals: team, market, product/distribution, and traction. Yet you put so much emphasis on team plus also market, right?
Yeah, exactly. And I think if I would kind of come back to square zero and I have to think like how what's going to be more like portfolio strategy, I think you should like realize whether you have any insights in any of these areas, like where you could kind of challenge like these four pillars in detail. If not, then like you can easily think of like first of all, like these are already very well curated startups we're seeing at the deal stage. Um, Things like the other option is just to perceive bad ideas as like a portfolio investment, right? Just like make a fixed investment in every company just because you believe someone else has made a sound analysis on these four pillars. I believe the methodology is sound enough. I think the people behind doing these evaluations are competent enough to do them. Like it's always like things we're gonna oversee, right? But I think as a process, I think it's the right process to believe in it, and I'm just like adding my own tweaks on top of it.
Um, Interesting. So let's try to reconcile two very conflicting things. As a founder, you've built up Nordigen, you've built up other ventures, you've created this skill set that is so unique, right? On the other hand, just before the interview, we were just discussing how we will probably not be great investors until we do at least 30 deals, right? How do you reconcile these two things, that you want to be maybe investing where you can be helpful and actually help, but that's thus limiting yourself due to your capacity constraints, and at the same time wanting to be diversified with as many investments as possible?
Mhm. Yeah, good question. So first of all, like again, it comes back to kind of this model of building approach, right? So um, I need to invest to build up my model, and I have to overlook some of the things where I can be helpful. So the way you can think is like I want my model to be kind of generalistic, right? I don't want it to be tailored to industries, geographies, any types of characteristics that like I might not necessarily have any competency in. It needs to be general enough that when irrespective of the industry I look at or geography, I can make the investment. For the context, there's actually only one startup of these 11. Actually, I had a good idea what these guys are building. All the other 10 come from the industries or types of clients or even geographies I have very little understanding of, right? So somehow I have to figure out how to make a general application of these things, and that's the hardest part of it, because otherwise I would not be making almost any investments at all. So I think that's part of the kind of becoming an angel investment and going away from being a founder that specializes like on fintechs and kind of B2B segment or whatnot, right? But the other thing is, I think I'm still doing a poor job in being helpful to companies. Again, for giving you context, I'm reading these like monthly newsletters, but I'm probably kind of trying to be helpful every couple of months only. Like for example, when I see, all right, like I'm reading kind of this very critical piece for this startup that I need to kind of help on, and this is where I can be really helpful. I think kind of that's as you mentioned, that's the flip side. Like I'm optimizing for my portfolio, not for number of startups I can be helpful on.
So you are essentially throwing away your skill set when it comes to trying to go above and beyond, be helpful only in those startups, invest in all those startups where you can help. But instead of that, try to become a good angel investor, which means a generalist angel investor.
Yeah, correct. Because again, I might be founder again, hopefully, but I'm definitely going to be angel investor for a while. So that's definitely a you can't call it profession, but like a skill set I want to grow better in. And I think there's no better way than investing even small amounts just to kind of it's like maybe it's a bad analogy, but like you want to learn poker, so just like play money. It's like you have to do it to learn it. So obviously we're working like or playing with real money here, but the minimal threshold is enough low that I think most people can partake it and like partake it in almost most deals.
Yeah, start with 1K, invest in a deal or here or there, and see where it takes you.
Yeah, and I think the issue is that if you're waiting for this one super deal, like realistically speaking, like I mean, what like 70, 80, 90% of the companies we're funding are you gonna go bust or gonna enter some stale mode at some point? Like looking for like trying to kind of flip your roulette wheel and hit the jackpot is very hard if you're kind of trying to kind of figure out who the right one is. The same way, if anyone asks me is like how to make a unicorn, like there's gazillion different ways to do it, right? There's no one kind of template for how unicorns look like. If you look at the histories of how most unicorns are made, like they often are very different, right? And that's why if you look at the companies at seed stage, we might actually overlook some unicorns because we have certain biases, right? So I still have biases even with my new general model, but like that's something I want to improve. I can only improve if I add more data points to it. So
Nice. So you build your model by adding data points, by investing. So by model being investment strategy. Oh, can we
it's that
touch
simple, yeah.
on from the other side? What do you see would be pure red flags that's okay, everything looks great, but no, this is why I will not invest? What are your red flags?
It's again like it comes back to the some of the biases I have acknowledged. So, for example, as I said, like sometimes I kind of breach some gaps founders have, right? So, if I don't see any clear story in a few of the main areas I'm looking for, then that would be my red flag. Like, what do I mean by that? For example, let's say a team. Team actually is an interesting case. So, I find that people find good teams with kind of big logos, right? So this person has be a like VP of GoCardless. Like, I mean, there's certainly it takes some skill set to get there, but doesn't necessarily make you a good founder or kind of good professional, right? So I try to kind of go deeper than that. Like, okay, like so what exactly these people have done, how exactly that expertise from that place translates in the company they're founding. Or I think it also, nicely ties into the market, like what assumptions these companies are making, right? So how visual those assumptions are. I find that as a founder, obviously, you have to be in some ways optimistic, right? Because again, you're working in high uncertainty fields, but sometimes I feel there's like very unfounded assumptions people make. So those would be my red flags. So it's just like kind of nuances I've built over time that I know where kind of when founders are making kind of leaps of faith, and I'm like, okay, this is like too much for me. But again, like I think we have to be realistic that the deals we see at the last stages of when we actually kind of commit to investing in a company already are very curated, right? So like most of them have been have gone through most of the hygiene processes. So uh, there's very few companies I have decided not to invest. So again, let's see how my model turns out. Like it's gonna it needs some more training. It's been training only for a year and it has only 11 data points. So I have higher expectations. So where it can end up in a few years.
How much time are you spending? So every 3 weeks, you might have a deal coming your way that you're looking at. How much time are you spending per deal?
It actually varies a lot. So again, it depends like how where I find some inconsistencies or things I want to look deeper. For example, market is a tricky one because on markets, like researching market is like a rabbit hole of things. You can easily spend like hours try to understand like the play, like kind of the space companies working in. Like I would often find that companies overlook the competition. Companies often overlook the maturity of the market, and those are actually tricky things to extrapolate if you don't know the kind of the market in the first place.
If you're not
Uh,
in.
it's like a lot of googling I do. Uh, Sometimes you find these validations early on, and like, oh yeah, it's like it looks good. I don't even need to look deeper, but it can go uh, anywhere from probably 15 minutes to 10 hours.
That's quite a range. um,
Yeah, it is. Some lie that some are especially early and some were like a bit more like gut calls. It just kind of felt right. And like that's a stupid thing to say, but like as a founder, like I've learned to make a lot of gut calls without having all the information. Like it kind of based on your like whatever subconscious ways of how you kind of look at things. You just like kind of you see the right data points. What I'm now looking more is like I want to kind of formalize my gut feel, right? So like
Interesting.
how my it's like I read how Magnus Carlsen plays chess. Like he figures the move pretty quickly and spends like then whatever like in the long games 15 minutes to kind of finding all the other routes that might be better. And very often he'll come back to the original call he made. So I'm doing the same. Like I make my call quickly and then I'm looking for all the kind of justifications or kind of issues I have. And I think only once I kind of reversed my decision. Yeah.
Yeah, that's fascinating. So, as a founder, that's
I'm not suggesting I'm Magnus Carlsen.
but you are a founder and an accomplished founder, and you are as a founder you are forced to make decisions without complete information, and here you apply the same approach. There's never going to be enough information, and
Absolutely.
the more you dig, the more rationalization you can find why not to invest, which is another danger for angel investors. Would you agree?
Yeah. No, no, absolutely. You're right. Like the decisioning can go both ways, right? But and again, like I'm very conscious that like not everyone is ready to work in these like making these kind of we can call them gut calls or like working with limited information. I think that's the probably the hardest part of coming into angel investing if you're not worked in such environments beforehand or worked with like such decisions. And to be fair, I think most people don't work in those environments. But yeah,
Very interesting.
I'm kind of
So, but
happy with
anyways,
that.
that's
And
something that
like I,
go ahead.
no, no, just to finish up, like, and I think, like, you're right. Like, my decisions can go both ways, but that's where you, by making some first call and then like reviewing it, I think that's how you make more thorough decisions, right? So you have to kind of take out any subjective feelings around like whatever founders or industries or company or like whatever how nice the design look like, and kind of be very rational about rationalize their decisions, right?
Now let's talk about very practical matters. Over this period, I'm sure you're a passionate learner, yeah, and then book reader. I'm sure on all things business building, startup building. Have you spent time on researching angel investing? And if so, what are your practical recommendations? Where to what frameworks to apply? What books to read? What articles to take a look at?
Yes, absolutely. It's like a never-ending process. I think what we have to be aware is that like it's not very traditional angel investing we're doing. Like working, but like participating in syndicate is like you're offloading some of the angel investment responsibilities to the syndicate, right? I do think it's useful to understand how angel investment in general works, some of the frameworks, but I think you'll find that there's much more focus on the founders and like things you should look into founders. But then again, in the syndicate, you have very little exposure to founders because right, once you're talking with them, right, not we, like we have an hour-long interview, we have to kind of extrapolate the context out. I think it's useful, but only to the extent. What I find very useful is I like to read about how startups were made in the first place. So there's a couple good podcasts I can recommend that like either digest the some successful startups in very detail, like Acquired is a good podcast for that. There is a podcast that like digests biographies and autobiographies of some founders. There is a podcast called Founders. I could suggest that like kind of flips through the most important parts in these books that are relevant for founders. So kind of point of this is that the better I understand kind of why and how different companies were built, I think the more context I have when I look at new companies, I see it, right? And again, I have to be careful that like what has happened in history might not necessarily be seen in the future, but I think we'll like one of the takeaways I have, and if I look at a lot of famous companies made, they always, not always, but like most of them also inspire a lot of things from other companies. Like, I don't think many people don't know that a lot of practices like Steve Jobs employed in Apple was actually based on Sony, right? So it doesn't seem very kind of apparent link, but and then again, like if you look at the history of Sony, right, then like you'll find some links in like some whatever philosophies or in on bar leaders like I don't remember who was inspired by Napoleon, but like I should check my references before I tell them out loud. But like I think there's a lot you can learn. So again, I try to kind of look at findings in those like history lessons and see how I can apply it when I look at these early stage companies and try to kind of guess whether they're looking at the right path.
Thank you. Now I have
And there's like a lot of other books, but like that's a rabbit hole.
We'll be asking you the list so that we can add to the notes, but I already have these that I have to add for my listen list. What happens at the end of that horizon, the exit strategy? How are you thinking about it?
So again, it comes back to the kind of risk profiles and the type of investment we're making as angels, right? So the I'm perfectly like I'm counting that I'm not going to see anything for like 10 years, right? So my expectation is that in 10 years, like most of the companies investing today should either go bust or should either be unicorns and hopefully we'll have our position already exited, or they're in kind of some sort of kind of gray area in the middle. The hopeful part actually is on the middle part, and I'm happy to see there's like a lot of ways how investors now can exit positions in companies that are not becoming unicorns. So I have a high expectation that in 10 years, like I'll be able to liquidate my current positions. I'm perfectly fine by that. So I think that's the question I would ask to everyone is like, are you ready to kind of freeze or potentially even lose your money or freeze for up to 10 years, which I think is fairly reasonable time horizon for investments like these.
Mm-hmm. So that means that you are allocating some sort of percentage of your wealth towards this kind of a liquid asset. How much is that ballpark that you think a person should think allocating?
It's again like comes to your risk profile, right? So some people are happy to put everything in bitcoins and pray that they're going to be rich tomorrow, right? I mean, I'm perfectly fine by people making that choices. So I would say overall, I have fairly conservative strategy in my investments, and this is the only part of the wealth building where I'm actually passionate about, where I'm actually ready to take more risks. And it comes back to my initial motivations, right? So I want to see this ecosystem flourish, and if I can help it, I'll be really glad to do it. And if I make more money out of it, I'll be even more glad. So this is this is my Bitcoin money. It's like
give me a range. Give us a range. What would be the proportion that you would think?
I'll not tell you current range, but I'll give you my overall where I plan to be at some point. So
Yeah.
I'll be ready to invest up to 20% of all my capital into different forms of startup funding.
Good. Couple of times you mentioned about deal flow, and that the deals that are coming through already have gone through a severe filter. Why did you not go out and invest directly and start building your own brand, start generating your own deal flow, and going that route?
Yes, good question. So I'm still employed. I still have my full-time job, and angel investment for now is still I'm not call it a hobby, but it's still let's say my secondary things to worry about. Now that being said, I have some companies coming directly to me, but I'm directing all of them to either bad ideas or different funds that I would find more relevant for the size and kind of characteristics of the company. And the reason is I think it is a time consuming thing, right? So I don't I think it takes a lot of time to properly review a company, and I don't think I'm yet in the position to purely because of time to allocate enough time. Now I don't know where I'm going to be in 2 or 3 years, but I'd be happy to at some point be able to spend more time in that. And I think there's different forms and ways how I can participate more into the more decision process. But yeah, I'd rather transfer all my brand building toward bad ideas. I really like the project. I wanted to succeed. So I think bad ideas people do a great job of doing the preliminary deal flow assessment, so I can be sure that I get good deals in the end. But someday I might go like a bit more direct or a bit more early stage process.
Awesome. Well, it's a community effort with Bad Ideas Fund, and essentially what you're saying is that's hard to combine with a full-time thing if you're building your own project. I mean, angel investing. So
Absolutely,
it's good
and I think
flow
that's yeah.
elsewhere through this kind of angel
Yeah, I think
syndicate.
what people don't, yeah. I think what people don't realize is that bad ideas is actually doing multiple of things that it's very hard to do alone. So, like one thing, as we just talked, is like brand building. It's very hard to build a brand where people come to you. First of all, there's very few people that have good enough brand that people are approached at some meaningful level. Second of all, you have to deal with so much noise. I've heard this funny story that it's not even funny. It's a bit sad that one angel was approached and he said no, and the person got mad. So it's like you're not even you're even risking some of your relationships you have had. That's one thing. The second thing is uh, it's a good segue into angel investment as such, right? I find that like-minded people are joined together. Like we can like even this process is a good way how we can share our insights that otherwise I would not have access to. So we have great minds we can share ideas with, and that's a way how we can build our angel investment muscle. And then, like, if you feel strong enough and you want to kind of take your uh, you want to try it out, then yeah, you can invest directly. But not there yet. Like I need to build my journey model first and get more time in place, and then I might try to do it.
Well, this has been super fun. Robert, let's do a team first question. Where can people find you?
On LinkedIn. It's actually I'm one of the least social people, or like in the internet world. So LinkedIn is like the best place where to reach out. And I have if you're not trying to sell me anything, as in like software you want to sell, I'm very eager to interact with people, answer to people, engage in conversations, and above LinkedIn, I'm always happy to meet up people for coffee. I'm kind of this old school guy that likes face-to-face conversations. So don't hesitate to invite me for any different types of beverages. I'd be kind of keen to accept the offer.
Awesome, Robert. That's a wrap. Thanks.
Yeah. All right. Thanks for having me.